And we continue to take a look at names on the move here. We're looking at CrowdStrike. So this is the morning trade, and CrowdStrike reports its earnings today after the bell. And joining me now, Schwab Network contributor Sam Vadas. Let's welcome her in as well. We haven't ever been on together, so welcome.
Thank you.
Thank you for being here. So tell us a little bit about a preview of CrowdStrike.
Yeah, well, of course, Nicole, thank you very much. Good morning to you. We all remember the blue screen of death, and not everybody was as lucky to get an early mark that day, particularly us in the news business. The show must go on. But I do mention that episode because it is really a good marker in terms of assessing this company's performance as we look ahead to this earnings report from this cybersecurity firm after the bell today. Certainly, if you look at the performance of this stock over the 12-month period since around the time that we saw that disruption and that outage, we have seen it climbing up over 50% or so. It really has been outperforming the broader major indices. And so the setup, you could say, arguably looks good as far as some of the analyst notes and the stock performance. Let's talk about the numbers as far as the estimates on the street right now. We are looking for expectations, EPS of 66 cents on revenues of $1.10 billion. So that would be representing annual recurring revenue of about 21% or so. So we are looking at perhaps a slight deceleration here, but still in double digits. And so no doubt we will be watching those numbers as far as what those metrics tell us, but also as far as what the company has to say about some of the macroeconomic challenges. But you only have to look at what some of the houses are saying as far as their price targets for this company, very much reflecting the optimism around the business here. A note out from Wedbush I got this morning. This is one of their favorite tech names. They're raising their price target on Crowd from $475 to $525 now, reflecting greater confidence very much in the growth story. They say the recent checks are showing a cross-selling and monetization story hitting the next stage of growth, moving into the next full year. In fact, their bull case scenario is that they could see this company even shares hitting $575 over the next year as the company executes on its core growth strategy. So as far as the stock is concerned, we are at a new 52-week high today. So as far as the performance, Nicole, I think, we are looking at a pretty good setup, particularly given that as far as earnings are concerned, we have seen surprises over the last 2 years as far as beating estimates there on the street.
CrowdStrike's an incredible story. I mean, after that global outage last year, and this stock sank to $200, and it seemed like it was the worst ever, and incredible comeback, seeing the stock here now this week at new highs. That's good news. Zscaler has been under some pressure at times. Sentinel-1 plummeted after its earnings report. It'll be interesting, but you still need cybersecurity. You see more and more folks signing up. I mean, we'll watch Fortinet and Palo Alto. Those names dropped after earnings earlier this month. So CrowdStrike is sort of the last of the Mohicans here, and let's see how it does. I mean, it's been incredibly good news, but the others haven't fared as well after the earnings.
Yeah, absolutely. I mean, we saw that with Palo Alto. I mean, you mentioned the competition. This really has been a strong performer as far as taking leadership in this space. And Nicole, to your point, I mean, this really is not negotiable as far as, wanting to spend on cybersecurity now as we are more interconnected. We have this sort of phenomenon of people working from home. And so we know that there is the spend there and very much the commitment. And so it does seem like these companies right now, Nicole, are very much capitalizing on the demand. And as we talk more about AI and the adoption here, there is very much a need to continue to spend on the risks that are out there at the moment. But I would mention, just before I leave you with this thought, I want to talk about perhaps some of the macroeconomic challenges that this company no doubt will touch on, whether they can obviously weather the storm as far as some of the economic challenges is going to be interesting because, of course, this isn't optional as far as cybersecurity spend is concerned, but they've also come out announcing plans to cut about 500 jobs, about 5% of the global workforce. Now, whether this is a function of sort of tightening the belt, it seems more that this is about being able to operate a little bit leaner right now. So I think that seems to be the view out there on particularly that headline in focus.
All right, great coverage there from Sam Vadas, getting us ready for this report. And as you noted, many buy ratings and overweight ratings have been pouring in here on CrowdStrike. So we'll watch for that. Thank you, Sam Vadas. As we take a look at this stock hitting new all-time highs and up 140% from those lows that we saw last year, pretty much, we want to go ahead and trade this. Let's bring in Tim Biggam, options strategist, Buy Alerts. Thank you so much for being here. Your thoughts on an example trade? How would you approach that, Tim?
Yeah, absolutely. I think, Nicole, that everyone is getting a little over exuberant on this stock on all fronts here. Certainly on a technical basis, the stock about as overbought as it has been in a while here. You alluded to that big rally off the outage low, right? It's up 60% from the early April low. So this stock is rocking higher, maybe a little too much, in my opinion. You alluded to, revenue growth still positive, certainly, but slowing yet. Price to sales now at over 30x for the first time in 3 years. So very rich valuations, even with growth slowing, even with the stock heading higher here. Last two times it traded at 28 times price to sales, led to big pullbacks in the stock. So I'm just going out being cautiously bearish here, really more neutral, buying the traditional June 20th, slightly out of the money, 450 puts, selling this week's 450 puts, capturing a very nice term structure volage, able to buy right around a 50 IV, selling over a 90 IV, paying right around $4 for the spread, have next week's options to further hedge if need be, and really just kind of expecting what the market makers and the options are, about a 5 to 7% perhaps pullback in the stock, given the red hot rally we've seen, which would be right at that 450 strike price. So I'm not looking for any, kind of thing that happened back in the, let's call it the outage, when it traded down around 200, right? Any kind of massive pullback. But I think given that the competitors have had some trouble post earnings, you might see this with CrowdStrike, and given the valuations, it's certainly warranted here as well. A pullback to the 20-day moving average is all we need.
Understood. And the high 484.63 there for CrowdStrike. So thank you for that example trade. How do you feel about the big picture on the market? We just got in the jobs report where they're talking about, or the JOLTS openings to be more clear, that job openings increase amid the battle of employers trying to get some good workers, at this point, but still being somewhat uncertain. Your thoughts on the market action?
Yeah, I think overall, Nicole, we're still in a consolidation period, certainly for stocks. We had, April showers did bring May flowers, the best May we have seen in several decades here. That's because April was so horrible. But I think stocks going forward, valuations getting stretched, interest rates aren't coming down. We've talked about before that 6,000 kind of level on the S&P 500, really a key area to watch. I'm not sure what will get it propelling higher here, because tariffs are going to be here. At what level remains to be seen, but they will cut into earnings, increase uncertainty as well. So I look for kind of these summer doldrums maybe to set in. Certainly stock buyers have emerged recently, so I think any big dips will be bought, but I don't see anyone rushing in here to get into stocks. If you haven't gotten in by now, you'll probably have patience and wait for a pullback. So wait for the drop and play the chop is how I'm going to position myself over the next couple of months.
All right, Tim. Thank you for that. Tim Biggam, options strategist, Buy Alerts. Thank you, Tim.